Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
And I'm Will.
And it is the two of us today, dynamic duo. I feel like this is how it started 19 years ago. I think I'm proud.
Has it been that long already? Damn,
yeah,
Andy.
2005, man.
Wow, bro.
I know I'm partly to blame for this. So here we are.
Yeah.
Just you and me today.
I commend you for tolerating me. I know I'm not the easiest,
No.
but you know.
Vice versa.
Yeah.
You've put up with plenty
Well, you know what? I have to agree with you.
Okay. We should probably start the show then at that,
That's
on that note. So our first topic up today is the Federal Reserve sets the course for a rate cut. It's going to change a lot of things, of course, when it comes to things that are connected to interest rates in our market. Jerome Powell came out last week on Wednesday saying that they are kind of paving the way for a rate cut in September. So
Yeah.
are you thinking they're going to do it?
You know
Is
what?
this just projecting?
It was just great seeing him. It was like he wanted to say it, but he didn't have the guts, the balls to say it, right? But like he indicated that we should be seeing, you know, some type of reduction to the Fed funds rate. And I think September is going to be a good time. I think he announced it without announcing it,
I think
if that makes sense.
You know how it's kind of like, you got your kids something for Christmas.
Yeah.
And you're like, I really know what's coming. I can't wait to see how you react when you get
Yeah.
it. Like, I think it was a little bit of that.
But he was nervous. You can tell he was not comfortable. Like he was just...
Well, and look what happened after that. Look what happened to the market. Like mortgage rates got better right away. There was a lot of sell-off on the indices. So I think that there's some immediate knee-jerk reaction to some of that. The news, number one, kind of how, like you're talking about, kind of how he postured himself in that. And then the markets, of course, completely changed and rates went like way better because of the 10-year yield and that nerdy stuff, which is great for us when it comes to refinancing people and helping them out. But the Fed rate going down in September, I think, is going to happen. I think it's probably going to be the only one, but I do believe the impact of that is not going to be felt for way down the road still.
Yeah.
People that are maybe in a deficit in their monthly budget may not see relief from that for another 6 to 9 months.
Yeah.
Put this into perspective. When they started raising rates, it was March of 2022.
Correct.
Now we're in August of 24, which is, 29 months later. So 2.5 years. Some of those things that were really being impacted and pressed by now didn't just happen in March, but they happened along the way.
Yeah. I mean, Andy, it's just good to hear that we are seeing light at the end of the tunnel, right? I know it sounds like exciting news, like, oh my goodness, everything is, but it's going to take time. They're going to pivot still, right? We still got to see, the unemployment. Everything's all about jobs. Jobs. That's going to influence where the federal government should be going, right?
Yeah.
So just announcing this, I think, if he doesn't, we're going to start seeing a lot more people unemployed, and that's not going to be a good thing. So he's got to be very careful how he does this.
And I think it's evidence of the demand destruction we talked about like 2 years ago almost. I remember making a video on my personal channel on Instagram in September of 2022. I was like, I have to get all these ideas out. And I made this 13-minute rant about Ford and UPS. But basically talking about the idea of demand destruction and why the Fed needs that in order to quell inflation, bring price stability back to the market, but it comes at the hands of unemployment rising. And with unemployment rising, it does start making a material impact in the market. And
Absolutely.
This has been repossessions start happening. Credit card balances continue going up. You also have delinquencies that are starting to happen. And then eventually you get into the whole housing part where it's like, oh, there's NODs and then there's foreclosures or pre-foreclosures. And I don't want to say that I'm expecting those things, but you can't pretend like they're not going to happen.
And I get it. I'm just glad that the market reacted in a positive way, even though the rates weren't changed. Right? He didn't announce like, hey, we're gonna cut it, but because he did feel comfortable with kind of saying that things were gonna happen, the market changed in a benefit for all of us.
Yeah. So let's talk about that, because even though the cut hasn't happened, there's already been a impact in the mortgage industry.
Big time.
Day one, I'll say day one for the sake of using the term, but like day two, already rates were way significantly better.
Oh yeah. So I mean, a lot of people are gonna benefit from it. I know. For us, it's good because we assist a lot of veterans, and so they have that privilege of using that VA IRRRL, that interest rate reduction refinance loan, right, with no out-of-pocket expenses, etc. And so you're talking about a person going from a 6.625 down to a 5.25. I know cost to them. It's wonderful news.
Yeah,
that's a huge relief. That allows them that $300, $500, $600 difference in payment. really allows them to go do something else. And so it just feels good.
That's going to come at large for everyone else too.
Correct.
Not just so I was just kidding, not just the HELOC stuff we're talking about, but when it comes to like having to replace your car and your auto loan being a little bit more favorable than 9 or 10%, maybe it's 7 or whatever.
I saw the average. The average when you purchase a car, it's 8%.
Right. Yeah.
8%.
Now, there are people that are earning specials. Like I don't know if you missed it or not, or you saw it or not. There was like a Tesla special in May for like the Model Y, like 0.9% or 0 or something crazy like that.
Yeah.
And they did with the Model 3 as well. I still didn't get either one.
I know. One of our friends got one of those, and he said he was going to pay like $1,400 or $1,500 in interest for the 5 years.
So
that's crazy.
Credit cards is another area that I want to talk about specifically because credit cards are the cumulative balance of our national credit card debt is continuing to go up.
Yep.
And interest rates on the credit cards are the highest that they've ever been in recorded history. And there was a warning from McBride here saying rates are not going to fall fast enough to bail you out in a bad situation.
Correct.
The reason I wanted to bring that up, and it's not, again, sky's falling Andy, I'm saying that we know privately off camera in conversations when we're talking with people, they're in some bad and difficult financial times, and the house may be the only thing that can get you out of that.
Yeah.
There are plenty of other ways you can get out of financial distress, absolutely. But when all else fails and the house has equity, that's when you come to us and we help you out of that situation.
No, exactly. I mean, the article states it right here. The average credit card rate rose from 16.34 in March of 2022 to more than 20% today, nearing an all-time high.
Yeah.
Those are the facts. That's the data. That's what it is. I mean, our current credit card debt is $1.129 trillion, where a year earlier it was $986 billion.
Yeah.
That's a lot. What is this telling us is that everybody's relying on their credit to make those purchases, to buy groceries, to pay their electrical bill, whatever it may be.
Well, so here's that thing. The Philly Fed showed a record in balance-based credit card delinquencies, and then revolving debt balances reached a new high, even as banks reported tightening credit standards. So they tightened credit standards, and they've declined new card originations, and still.
Yeah.
So, that's kind of the evidence that you need to know, okay, people are really struggling.
Yeah.
And we saw this before in the past when people's lines of credits would be chopped down, their credit limits would be chopped down, things like that. Like, that's not foreign to us at all.
Yeah.
We've seen that.
Yeah. I know. I had a client also that I gotta send that payment so they don't tear down on my credit card limit. Yeah. And they still did it.
And they still did it.
You know, it's happening.
So kind of like a forewarning to some of you. You might get that phone call like, oh yeah, you need to pay down some of your balance, and we'll let you have your limit, and then they reduce your limit anyways. Yes. What do you mean the creditor isn't in my corner? They're in your they're in your wallet. They're not in the corner all the time. So one of the things I think I wanted to get your opinion about is Jerome Powell kind of made this comment of if we get the data we want to see, which leaves it open to like maybe they won't do a rate cut, but it's like I think it's already baked in. It's a foregone conclusion. But I don't know. Are you buying into that? Like, do you think they already have the data, or do you think he's just kind of saying that to leave
Come on now. I don't want to say it, but I'm going to say it. I think it's a bunch of BS.
Okay,
right?
that's fine. That's why I'm asking.
The data's already been there. They already know the data. They skew the data, to their benefit. It's just, I think everything's baked.
Okay, so it's posturing. Okay.
Absolutely.
Now, so if they do the first rate cut in September, then, and this whole, what's this, a target? So trying to get to below 4% by the end of next year. So that means there's at least 4 cuts of 0.25%.
Yeah, because we'll be 5.5 down to 5.25. That means 5 more rate reductions next year.
Right. So that's at least 4 or 5 in the next 16 to 17 months. Yeah. And I think unless there's an all-out calamity, it's probably 0.25% rate hike down, or rate cuts.
Yeah.
But we have seen rate hikes in 50 bips and 75 bips before. So it would be alarming to me if there's a landscape economically that would cause us to have to do a 50 bip or 75 bip cut. That would mean something really really worse is going on.
Yeah, exactly.
I'm trying not to be over dramatic here. I'm just saying there'd be something bad happening if they're going to do 50 and 75%, 75 basis point chunks.
So would you agree only one time this year?
I think it has to be.
Yeah.
I don't believe
And I think,
I don't believe it's in their interest to do it in the because it would be September meeting and then November. It's right in the middle of the election.
Yeah.
Like I don't think that would be favorable to make as critical a decision again, unless there's something that is out prioritizing the timing of when that would be made.
Yeah.
Then that would lead to evidence that there's some other bigger problem lurking that we'd have to take care of.
Well, I tell you what this means a lot for a lot of the people that we did provide lines of credit. This is actually good news for you. This is good news in the horizon, right? Because it isn't an adjustable rate mortgage. You're going to start seeing that line of credit, the interest rate being reduced. So that's a good thing. Credit cards also. Car loans will also start having an impact on this, which is a good thing.
And student loans, for those of you that still have them, that either you're still paying them because they weren't paid off or they weren't, what's the word? When someone else pays it off for you? How come I'm blanking right now?
Yeah, no, they're...
Like forgiveness. Yeah, student loan forgiveness.
Not for... Oh, that's a forgiveness?
I'm talking debt forgiveness.
Debt forgiveness, yeah.
Forbearance?
Yeah.
Is that the word? Yeah. So those of you...
That's what it is, forbearance. But there is forgiveness plans, too.
That's why I mentioned to you. So if you have not checked into any forgiveness plans you might qualify for, you can check that out
just
online.
Google it, I'm telling you.
There's a lot of places that are willing to help you sort through that. So last comment on this, though, savings rates. So saving rates right now are going to be the highest they are, projecting that the Fed's going to reduce their central bank rate in September, which means eventually the banks are going to follow suit, and those CDs are going to have a reduced rate of return as well, because that's always a margin play based on what the Fed funds rate is relative to what they're offering you to store cash with them. So keep that in mind. If you can put money in a place right now that's at 5.25%, 5.5%, and it's for 6 months, 9 months, 12 months longer, give that a look, because if the Fed's going to step down and start cutting, then the eventual APY connected to that is going to be marching down as well.
APY, your annual percentage yield.
Yes.
Okay.
All right. Memo.
Yeah, good news.
There is a problem with buyers. From Housing Wire, almost 40% of home shoppers are hitting the pause button until after the election, a recent survey says. So
I've been hearing this, Andy. It's been crazy. Yeah. But I've been hearing this. People are like, no, I'm just going to wait after the elections. Like, I think that our president's going to reduce our interest rates. They're like, people, the president does not have nothing to do with this.
That's not like a switch on a desk somewhere.
It's great that
Hold
they
on a
think
second.
that,
I'll call you back. I got to adjust this rate right here.
It ain't going to happen. It's not the president, remember. It's our economy. It's our jobs. There's a lot that goes into it.
So this survey of 900 prospective home buyers, which includes veterans, current active duty military members, and civilians. So they highlight some interesting splits between veterans and civilians. Only 25% of civilians plan to buy in the next 6 months. So basically by the end of the year. Let's just leave it at end of year, even though it spills over. 25% of civilians plan to buy. 40% of veterans. But when asked if they feel better about their finances compared to 1 year ago, 63% of veterans and 59% of civilians said yes.
Yeah.
That's still a lot, given the other nature of the economic stuff we talk about with inflation and costs and borrowing and all that. So these numbers are higher than a year ago, even though it is more difficult on people now than it was a year
exactly.
ago.
Your salaries, it's not like it's going to change. Affordability is still going to be a big issue, especially if we start seeing, the rates going down. That may just cause also your home purchase price to be higher. You know? And so it's just going to put them in a bad situation still.
I think it's very much categorical. That was the word I was thinking of when you're saying that right now is that, there's certain things I just have to buy. I got to buy food for my kids, got to pay my utilities, put gas in the car, pay my insurance, that kind of thing.
Yeah.
There's things I can go without. Like I can go without eating out 3 times a week and go to 2 or back down to 1 or not at all if I can't even do that. That's more of I'll say a luxury. But categorically, there's just things you have to pay for, and I think that those things are just baked into the economy, and we see people pay with their credit cards instead of that. It's the psychology here that's interesting to me. Not because I'm a psych nerd. It's just because if 40% of these respondents are hitting the pause button, that represents a lot. I think of that mathematically. This is out of 900 people. Well, how about out of 100 million?
Yeah,
that's a lot of people that are like,
too many.
That's okay. But doesn't that strike your interest a little bit from our demand comments? Because we're like, demand's still crazy.
Yeah,
but it's still crazy, and 40% are saying I'm going to hold.
Yeah,
what's that mean when they come back?
Yeah, things are just getting a lot more expensive. That's for sure.
You're gonna, and instead of like a bidding and escrow, we're gonna have to have fist fights in front of that's a parking lots, like in driveways of houses, like winner take all.
Yeah.
So you might have to dust off those old boxing gloves and get
I tell you,
get after it.
And here's a lot of things that are going on, like the new rule with NAR. All these things are just going to affect all that. It's going to have a huge impact. So this is just part of one of the stories, but we got other things that are going to just be even more impactful with all of this.
We have a great conversation coming up this week that airs after this episode, specifically about the NAR lawsuit with Friends of Mortgage Heroes. We had someone on, and we were talking about that in depth today.
Yeah.
So that is going to come out, and you can. Here's another reason why people might be hitting the pause button in addition to the election thing.
It's going to be a have to, right? It's not going to be a pause because I want to pause. It's a pause, a forced pause, because now I have to come up with even more. Well, and who's going to pay the price? Is our active servicemen and women and our veterans.
This is one of the problems we talked about when the NAR lawsuit was announced. This is going to negatively impact specifically the VA community, active duty and veterans,
big time.
because they're not allowed to pay the buyer's broker fee.
Yeah.
So that rule was changed, but also I learned a couple of things about the NAR lawsuit and its impact starting in August. That will potentially not change anything at all. I think it just changes how we get to the final conclusion because there's like some new forms and some new ways. But when we're having this conversation, I'm thinking, you know what? This still ends up at the same conclusion. People are going to go, oh, I'm willing to pay the full price on the house so that I don't have to pay my agent out of pocket, which is how we do it now.
Yeah.
So materially, there could be like no change. The reason I mention the psychology of this is because it's 40% of home shoppers hitting the pause button until after the election. Like, there's other reasons. So number one, this is like an election-specific survey, but that's not the only reason. There could be other things like because of job loss or needing more money, affordability, other reasons that are personal and not really on a survey. So there's more than 40% of people that are just not shopping. Is really what I'm coming to. 40% is specific to this election anchor in this article.
I mean, cool article, but I think the information's
It is a little bit I'll say partially skewed, just based on who the surveyor is. It's not a problem necessarily, but even if I like chopping things in half for the sake of numbers on the show and people are watching on YouTube. Even if it's not 40%, it's 20.
That's right.
That's a lot of people still.
Yeah, no, it totally is.
What would you be doing? Are you a buyer right now, or are you waiting after the election?
Here's the Well, I'm buying with the opportunity, right?
That's what I'm saying. It's asking election questions. So, I don't care about the election outcome if I'm trying to buy a house.
But the difference is we understand that the election doesn't influence the interest rate is the different thing when the majority of people probably don't understand, right? So what's the saying? Like, people follow the herd, right? Some people that are the risk takers, they go against that. So I'm the one that's going to be going against that and just see an opportunity. We're taking it down. I mean, you saw last week, we took down 2 properties. It's what it is.
Yeah. The deal's a deal when it's a deal.
Exactly.
Regardless of anything else going on.
Numbers work out. You work them out now. You can't wait for later.
Yeah. So what, I mean, is that kind of like your base case for what you tell somebody who's kind of maybe like sitting on the fence of like, I don't know if I should buy until now or after the election to see who wins, whatever. Like, it sounds like you don't care about that. Is that the same advice you give people too?
Yeah, absolutely. Yeah. Whatever's going to make the most sense, right? And that what's going to be factual.
Yeah.
Which fact is right now, if an opportunity presents itself, this is what you can rely and obtain now versus I don't know what's going to happen. You know, what if the person that you thought was going to get elected doesn't, and now everything just stays the same,
and you're still on the sidelines,
right? Like, and then it's like, why take that risk?
Yeah, and I get that, like, it's our job, like it's our business, it's our company. So of course we want people to buy homes, we want people to refinance. But at the same time, we've talked about this many times before. If it doesn't pencil out for you and it doesn't make sense mathematically, well, you can't do it anyways. I can't make you just make more money to qualify.
It's true.
Sorry, it's people that come to us that want to buy, but then you still have to have kind of conversations. Like, let's be real. There's times when we have to have hard conversations with people that actually want to buy. You have to tell them you can't.
Yeah.
You have to tell them, like, oh, your credit sucks, and let's fix it.
And let's work. Let's create an action plan.
Right. So, there's kind of, I'm kind of going with like 2 different kind of outcomes here, Memo.
Yeah.
One is, yes, we're absolutely on the team, go buy a home, go invest in real estate, that team. We're also on the team, like, when we got to wear that hat and we're like, look, this doesn't make sense for you. I'm going to tell you it doesn't make sense for you.
Yeah.
There's no advantage for putting people in a situation that they're just going to lose their ass and then get their home taken away.
The other thing to consider too, it's been a difficult couple of years. It's been out of the norm in certain situations of our financial crisis, rates going up so quickly. We never ever seen that. It's just been crazy market. So I think a lot of people are just right now skeptical. They don't understand what they don't understand. It's like, I thought I got it, but things are going in a direction that you can't get it. So I get them too. I understand. And sometimes, there's nothing wrong with waiting for the right opportunity.
Yeah.
Yeah,
that's a good point. I think we should end that on that.
No, which it's great because this is a great transition to our next article, which is our renters, right?
So 86% of renters say they can't afford to buy a home, with the majority saying they'll never afford one. This actually made me
crazy.
Sad to read this. My first emotional reaction was, this is sad.
Yeah.
Majority of current renters report they can't afford to buy a home, per a new CNN poll.
Yeah.
What's automatically challenging about that is like rent is so high and mortgage is so high. So if you're paying rent, you can pay a mortgage, which was something we talked about last week, which is there's way more people that can actually mathematically afford a mortgage than think they can.
Exactly.
That are already paying rent. So then now to see majority of current renters report they can't afford to buy a home, it's like, is that just the way they feel? Or that they actually can't? So with over half Americans saying that they're pessimistic about ever achieving their goal of homeownership, people are saying I can't afford and I'm just dealing with it. That is a bummer.
Yeah.
So this survey memo said CNN study found 86% of current renters in the United States can't afford to buy a home, as one hallmark of the American dream drifts increasingly out of reach for thousands of families.
Yeah. And I mean, hey, I don't want to say it, but I got to say it. But thanks to our Vanguards, our Black Rocks, they practically own everything, right? They're practically owning everything. And why are they doing that, Andy? Why is it worth it for them? Our problem is a shortage of homes, right? But if we got builders and everybody to start building, what would happen to our housing? The prices, everything will start leveling off, right?
Yeah.
That's what we can see. But why aren't they? Because you're incentivized as a builder. Well, hey, I'm going to build it. I'm going to make good money off on this. Vanguards on them. This is how they make their money.
Yeah. I mean, we can totally go down the rabbit hole of all that stuff. And I'm not saying we shouldn't talk about it right now, but I agree with you. I know that that's happening. We've talked about corporate ownership at the corporate ownership level for a long time, or many different cases without really going hard on it. But the deal is that they have been scooping up properties out of the hands of people who are willing buyers and can, and it has created discouragement among people.
Of course, and it makes it a renter's nation. Like, hey, you know what? Just rent. Can't afford a home? Stay here. We'll build for you to rent.
Yeah.
We'll take advantage of that.
Yeah.
It's unfortunate.
Because they know people have to have a place to live.
Yeah.
And that place to live is going to cost you money. Oh, well, you might as well be paying me versus me just watching other people make the money. That's not how these guys roll. So they're playing this like ultimate game of hungry hippos. Like, oh, there's 1 million homes for sale. I want as many as I can get. I want to control and have ownership of as many as I can. On the advocacy side of owning investment real estate, we talk to people about that a lot at the personal level. Like, you should want that. I think there's a big contrast between us telling that to individuals who might own 2 or 3 in their lifetime versus a conglomerate that owns tens of thousands and creates a whole different economic situation.
But I guess there's going to be a no rent control, rule coming into place. We'll see how that works out too, right? And it's if you own 50 units or more, so we'll see.
I saw that. I didn't make a pit stop and read about it because I'm like, you know what? I think that's for another day.
Yeah.
But I think you're also onto something because there will have to be some sort of controls in place at that level, because that's also been a problem too when it comes to what they call slumlording.
Yeah.
So that's not like that goes away just because a rule changes. They're going to have to do something else policy-wise. So we're looking at pessimism. It feels out of reach for people. I'm just going to read this part because I don't even know who this guy is, but I was like, I want to give him a hug. Jeremy Anderson, I feel you, dude. We have given up on home ownership. At first, I wondered if I was a failure as a father or husband because I can't get my kids a lawn to play on. It's taken a lot of soul searching to understand this is not my fault. It's the fault of a poorly planned system.
Jeez.
Woo! I was like, damn, that's tough.
Are we done?
That's hard. But it is. And there's how many Jeremy Andersons are there out there? There's thousands of people who feel this way. And I'm sympathetic to that. I really am. I know that I have a lot of takes on this show that are very bold, and I'm very vocal and loud about certain things I believe and I opine on economically. But this thing hurts, man. Yeah. There's so many people we've watched achieve the joy and the milestone of home ownership. The first person in their family to own a home. Yeah. They finally get out of a bad neighborhood into a nice neighborhood where the kids can go play on the lawn. Like, when I read that, been prepped for today's show, I'm like thinking of dozens of people we know that we've helped get that. And here's this guy that I want him to come in and talk to you. You know what I'm saying? Like, I don't mean that like salesy. I'm saying like I want those people to come and talk to you.
He's probably living in New York though.
Whatever. You could be living in
downtown
Paris, France, or more, whatever. My point is, like, I know people are discouraged. I know they're sad. I know they're frustrated. If you can get off of that for a minute and have a conversation, please do it.
Yeah.
If you're even just questioning whether you should or maybe you still can or can't, like at least ask the question. Come ask Will the question. Ask Brian the question.
Yeah, any of us. Hey, if you have any family members that want to go in there and just be co-signers, we can figure it all out.
Well, and 86% of them people surveyed saying this, and then there's this one guy who has like these quotes that are just like heart wrenching.
Yeah.
And there's knowing that there's thousands or tens of thousands of people that feel the same way. It's really tough. This is going to be an uphill climb for whoever the new administration is.
Yeah. They just feel like the American dream is out of reach now.
Yeah. Well, and then I think maybe callously some of the things we started to see in social media specifically, is that the American dream has changed. The American dream is now time freedom and flexibility to go wherever I want, and that's partially true. I think more generationally, like Brian's generation, like I want flexibility of time and choice, and I want to go. I don't want to be anchored down to anything.
Yeah.
But then you got these guys like Jeremy who are like, no, I want that still.
I want anchor.
I want that previous American dream, if you will. So I don't think the definition of American dream is changing because for these guys, it's not.
But it is becoming more difficult. I mean, I always keep saying this, with the kids, my kids, it's going to be more difficult for them to finance a home later, in a few more years. It's going to change.
So can I say something there, please? Because I think that you've done a really great job at leading from the front in this, in creating that legacy where like each of your sons are going to be able to have a house, buy a house, and that's something I would say to people like Jeremy in this article. Like, if you want your son or daughter to also do that, go do that. Like figure out a way to go do that for them, and you can leave that for them. Yeah. So I commend you for doing that. I know.
Yeah, thank you.
It hasn't been easy, and a lot of people
never is.
Even though we have like a small channel, people, I know the sentiment still is like, oh, well, look at these guys with their office and their studio. And we still all came from nothing. We came from places where we didn't have the things we have now. And our effort, hard work, and outcomes have brought us to a place like this. Much like other people that you're seeing have studios and shows and whatever, like they all started from little to nothing. Yeah.
Everything comes, everything comes at a price, at a sacrifice.
It's not an impossible scenario. No. So my heart goes out to people who are feeling that way. Yeah. And my encouragement is, please try to take a second, or even if it's a third or fourth look at getting yourself into affordability or qualifying for a house.
Yeah, just take action like anything else. I mean, which brings us to this next topic, which is...
Did you see my deep breath?
Oh, my God. This is just crazy, right? This is just nuts. It's unheard of. $1 million starter home is now the norm in 237 American cities. That's crazy.
Did you ever think we'd have a
No,
headline
when I
like
saw that, I'm like, what an article. I even put right here, crazy. Because when you're growing up and you remember, I mean, I'm sure you remember, you're looking at a home and it looks like $1 million. You can tell that's $1 million. Like, I want to live there. That's like, man, this is what I dreamt of.
Trimmed hedges, a driveway that goes around.
Exactly.
A waterfall,
the
a
White
fountain.
House, like ginormous. And now you look at $1 million house, you're like, come on now. For reals? Is that this is what we're coming to? So it was really hard, but a very good article. I mean, just to hear this information, it was just crazy, right? Hundreds of cities across the United States now have starter home price at $1 million or more.
So I'm laughing at you because the other day I'm like we live around this neighborhood, right? Yeah. So we're in this like $900 to $1 million area, and I'm like the other day I'm like out in the front yard like throwing my couch onto the curb for pickup. I stepped back. I was like, this is such a dichotomy. Like this real expensive house, and there's a couch on the sidewalk for the trash company to come pick up the next day.
Yeah, even the trash people are like, well. This doesn't look like that.
No,
you know what I mean? It's crazy.
I didn't tell you the punchline yet. Yeah. I woke up the following morning. It was gone. They didn't even come. Someone grabbed it. So someone came and took it. They probably sold it, but they came and took it before the before the bulk item pickup people arrived. So again, in front of $1 million house, right?
Yeah, that's crazy.
So there were only 84 of these types of cities 5 years ago.
5 years.
So it's gone 2.5x in 5 years, which has never been done, I don't think. And for going from 84, that seems like a lot still too. Yeah. But our top 100 metros, I can see the argument. New York, Miami, San Francisco, LA, Seattle. I get that. But 237 of those, man, that's a lot.
Yeah.
And that's kind of it. You know what it is though? It's that epicenter thing. Because I guess I already said it. Like it's the top 100 metros, but now they have like their surrounding areas. So I think in order, it was like New York metro area had 48 cities that qualify.
Wow, that's crazy.
San Francisco had 44 cities that meet that.
But
LA,
California, we had the most.
California as a state had the most.
Yeah.
Look, LA, 35 cities.
Yeah. It says, Andy, it says roughly half of the 237 cities are in California alone. Follow on the list by New York, New Jersey, Florida, and Massachusetts.
So crazy, dude. That's a lot. And this kind of does paint the picture of like if you take a snapshot in time of where real estate is and, midway through 2024, like here's where we are. I mean, I rely on CoreLogic a lot. I know I talk about data more frequently than you guys would care, but this is exactly what we see, and this is why you see equities at all-time highs, and this is the new problem for people, the barrier for entry people trying to get in. So even though that is the case, we still have a demand problem.
We still have a demand problem. In some areas, we heard like Florida and, certain cities in Florida have gone up 30 to 40% more inventory right now. Texas was another one that experienced 40% more homes available, which is crazy. It's kind of like they're going back to pre-pandemic levels.
Yeah.
Which is a healthy, healthy market.
But if you were to guess, like, do you think those places are going to have like a 5 or 10% slump, or do you think in price, or do you think they're just going to kind of equalize and keep and maintain their market value?
Yeah, I think they're still going to maintain their value.
So I'm inclined to believe that when the Fed cuts rates in September, that's going to be the flag that says, okay, everyone rush. And, people are going to come back off the sidelines and try to qualify again, which then keeps the demand going, which keeps the prices going. So that's kind of like my long explanation. I think prices are going to stick. You have other people surveyed here in this article too that are saying like they expect prices to stay the same. They think they're going to even maybe go up. They definitely don't see prices going down, but they're actually saying they might even march up a little bit as this continues, especially if rates go down.
Again, I mean, we talked previously about the Vanguards and all that. Everything's done purposely.
Go there.
Everything's just done purposely. We're not building enough. We don't have enough inventory for the amount of population that require a home.
Yeah.
Those are facts.
I want to take, and maybe this is kind of a personal aside, but, many years ago we ran a homeless outreach here in San Diego, and every quarter we did an outreach downtown. And I happened to notice something. There's no money in homeless outreaches. There just isn't. And so, they say that like half jokingly, and definitely don't mean that callously. But, there's a lot of resources allocated to solving the homeless problem, yet it gets more difficult.
Yeah.
And there's more people on the streets.
A lot more.
And in some ways, it seems like there's more help, but it feels like there's less. And then you have the actual housing and shelter problem where you would probably notice, too, a lot more motorhomes. And trailers parked on the side, people sleeping in their cars, like little tent cities popping up around town where people can go and all that. And so like the idea that there's like no money in homelessness is true as a saying, but at the same time, there's a lot of money gets directed towards solving that problem, which seems to be going unsolved.
Yeah.
And
100%.
Again, maybe Vanguard and BlackRock have funds allocated towards that. I don't know that they do. I'm not going to sit here and pretend like they do. I would like them to build more inventory. How about you know what they should do? They should give low interest loans. I really hate this idea too. I'm going to say it anyways. They should give low interest loans to builders.
Yeah, of course.
If the banks won't
incentivize them.
If the banks won't do it and the municipalities won't do it, then if they have the cash, they should probably incentivize them to go build some places. Yeah. I feel both ways about that because now we're ingratiating them even more by giving them interest on a loan, but to build homes and maybe there's something there.
Yeah, I mean,
is this a terrible idea? Someone tell me.
Yeah, Californians, we have the whole ADU, and we're actually being incentivized for us to build more on our land, right?
Is that a bad idea? I just thought of it. I didn't write that down. I just thought of it. Like, is that a bad idea?
Yeah. No, I think let's do it.
That's a good idea.
Yeah.
This may or may not be of importance to people, but a lot of foreign buyers who are wary about putting money in the U.S. Real estate market. Like I get that too. We don't actually deal with too many people like that. Every once in a while we have people that live in Mexico because we're close to the border. So close to it, they're buying this side, buying that side, or they live there and buy here. So I think that's a lesser frequented topic for us. I also do understand why people might think twice before doing that.
Of course. Yeah.
Okay. Well, any final notes on this one?
No.
I like it though. 237
That's crazy.
Cities that have a $1 million barrier for entry.
But it makes sense, right? Because when you're talking to friends that are in different states and all that, like they're experiencing the same thing. You're like, oh, dude, does $1 million home look like?
But you know what? Like I know locally. Okay, so look locally, I know that in some places, like that's just the case because those places have come up to that. I think there's the California effect too, where people who have left California and taken their money are buying the place at that market value plus a little bit over what the value is and driving those up. I've seen that personally firsthand with some friends in Idaho, some in Texas, Nevada, Arizona, and there was another one. In Florida.
Yeah, I mean it helps, right? Like I got a client that their appraisal, they're in a purchase in Arizona for $875,000. The value came in at $800,000, but because they sold their home here and they're gonna net $700,000, they're okay with just paying that. This is like for their forever home.
Wait, the appraisal was $75,000 below the price?
Correct.
Oh my gosh!
And they're still like, hey, we're still gonna move forward. It's okay. We'll pay the difference.
Well, so they have $700,000 because of their sale here in California.
Correct.
They're going to where are they going to Arizona?
Arizona, yeah.
Wow.
Relocating. I mean, you're saying that. So that's another sales comparable in that area that's just going to help that community.
That's crazy. Yeah,
exactly.
Well, yeah, because then that's at that place at $875 because someone's willing to pay it, even though the appraisal is $800.
That's it.
But now that becomes the comp for the next deal.
That's it.
Wow. Well,
Yep.
and here
that's
we go.
how you start seeing the millions, right?
Okay, so there's that California effect. Like
Yeah,
it's
exactly.
extra money. I got a little bit more scratch.
That makes perfect sense. Of
burn.
course.
Oh my gosh. All right. Well, let's just close it out. Favorite part of the show today.
Yeah.
Go
for it. Knowing that there's 237 cities that are a million, it was just like, whoa, right? I mean, not that it matters to me, but that's just crazy. And that it's gone up in 5 years, over double. That's what's crazy about it.
Yeah, that is astronomical.
You know, that's just to tell you that, you know, when you're getting people that are waiting for the elections, going back to all that, to this, it's like, I hope you understand that this is going to change.
Yeah.
So if you're sitting on the sidelines right now, you're not making moves and you're in a position to make a move, I'm telling you, just keep going. Keep looking forward.
Yeah, I love that you made that point. I don't want people to listen and be discouraged, even though we might be saying things that are discouraging or be highlighting things. Please don't be discouraged in that. I think that there is going to be some light at the end of the tunnel because my favorite part of the show today was the Fed. I think the Fed signaling that they're going to reduce interest. I know, what a dork. I think the Fed signaling that they're going to reduce interest rates starting September. They're going to do it. They have no other choice but to do it. They are getting the data. They're not being honest about how bad the data is. They are being dishonest about it. I'm going to tell you that right now. I won't cite everything at the end here, but I know they're being dishonest about it. They're going to drop that by 0.25% in September. I think it's going to help people on the way towards the future of lower rates, but it's going to take some time. Yeah. Be careful, be vigilant, and be prepared financially.
Yeah, that's it. Just be prepared. But I agree with you. I mean, it's like seeing light at the end of the tunnel, right?
Yep.
Even though the interest rates are pretty similar to what was in December, it's still a good feeling. It's like, okay, we have hope.
It's kind of like being on the crest, though, like coming on the other side of the mountain, though. You know, okay, we're going to end up going down this descent. We've been on this incline for a while. We plateaued, and we're going to get on this descent eventually. I think that's going to give some relief to people emotionally as much as it is financially.
Yeah, we'll feel the descent once they do make that move.
Of course.
Once we see that move, that's when we're going to start feeling that descent. Okay, now we're going a different direction.
Yes, there's kind of like the later we will, but also, again, we're recording this on a week where we already had, I don't know how many people, 7 or 8 people that you're already able to do the VA IRRRL for because of right now it happened this week, which isn't even the yet part we were talking about. So they're already in a position where they're going to save a ton of money.
Well, I mean, we have people that we locked in at 7.5, 7.25, 6.8, you know, like, and now you're looking at the 7s. I just did one 5.25.
Yeah, I know.
That's
I
crazy.
know.
That's nuts.
So there's already like some immediate, I'll say, relief happening. Even though
Andy,
there's still more to come.
We got a client, $1,300. It was $1,225 in savings a month.
Just on the IRRRL?
Yes.
Holy crap! That's a lot.
Because it's a million, a little more than $1 million, right?
Okay, but hold on.
But that's
if
a lot
I
of
just
money.
gave you $1,300 extra every month,
that's right.
That's a lot of money.
That's crazy. Yeah.
Dude, what's that? almost $15,000 a year.
That's it.
That's a lot.
That's
like a nice pay raise.
Exactly.
Speaking of pay raise, thank you for subscribing to our channel. We're eventually We don't have any sponsors. Don't worry about it. Well, thank you for watching the not Friends of Mortgage Heroes, the Mortgage Heroes Weekly Podcast.
Yeah.
What show are we doing right now anyways?
Yeah, we're doing something.
Yeah, well, Memo, thank you so much for doing the show with me today. Remember to like this video, subscribe to the channel, and forward this to anybody you want to share this information about so they can also win in mortgage and real estate.
Yeah.
We appreciate you guys watching every single week. Thank you so much, Memo. You did a great job today. I love you and appreciate you.
Appreciate you too. And, I thank you, everybody, for watching us, supporting us. We're overwhelmed with all the love and support that you guys provide us. So thank you so much. We just try to break these articles down to what we understand, how we do it. We're in the trenches day to day, in, day out. So we just want to simplify it, because that's how I am. I like to simplify things because I need it simplified. So we appreciate you.
Great job today.
Yeah,
thank you all for watching, and we'll see you again next week.
That's it. See ya.